A Life Insurance Guide. Chapter 1. A Life Insurance Guide 1. Life Insurance Info 1. I detest life insurance agents. They always argue that I shall one day die, which is not so. Stephen Leacock, Canadian humorist. Life insurance is basically financial protection that you buy which pays off your dependents in the event of your death to help your family for the income they lost as a result of your death. You can buy life insurance on just about anybody including children and buy the policy to pay off whatever amount you like. The greater the cost, the greater the payoff. If you're single or elderly with no dependents, you don't need LI. Kids don't need it either. There are often conditions attached to life insurance policies. They are voided if the person commits suicide or double in payoff if it's an accidental death or any of a number of conditions. There are also conditions which affect the cost of the policy such as whether you smoke, drink, etc., type of occupation. For example, a police officer's job is more dangerous than a doctor's, so he would pay a higher premium based solely on occupation. Life insurance can also be used to help with other financial goals such as funding retirement or education expenses. However, the main purpose of life insurance is financial protection in case of death. If your primary goals are something other than protection, you should consider what other financial products are available to meet those goals. In other words, don't buy LI as an investment instrument. In a nutshell, don't buy whole life insurance, with investment features, or universal life insurance, combination term insurance with savings plan. Buy only the cheapest term policy for the value that would replace your income if you die with no special features like double indemnity, etc. If you want to save or invest money, don't do it through life insurance. Cancel overpriced insurance policies for a partial refund. Don't let them sidetrack you. Cancel your expensive whole and universal policies and buy only simple term insurance. Don't buy too much life insurance. Don't rely on your agent to tell you how much you need. Remember, it's there to replace the loss of income that you would have gotten through the deceased person. Life Insurance Info 2. Life insurance gets kind of complicated. Moreover, the customer usually doesn't know what percentage of his payments go for the savings/investments aspect and what percentage for the insurance aspect. Studies show that as an investment vehicle, whole life policies aren't that good, delivering at best about a 6% return. Some people argue that using LI as an investment tool is good because it's a tax shelter, but generally, the tax benefits are not enough to outweigh the benefits you'd get if investing the money yourself without an insurance company. The advantages of permanent insurance are that as long as the necessary premiums are paid, protection is guaranteed for your entire life. Premium costs can be fixed or flexible to meet personal financial needs. The policy accumulates a cash value that you can borrow against. Loans must be paid back with interest or your beneficiaries will receive a reduced death benefit. You can borrow against the policy's cash value to pay premiums or use the cash value to provide paid-up insurance. The policy's cash value can be surrendered in total or in part for cash or converted into an annuity. A provision or rider can be added to a policy that gives you the option to purchase additional insurance without taking a medical exam or having to furnish evidence of insurability. The disadvantages are that required premium levels may make it hard to buy enough protection. It may be more costly than term insurance if you don't keep it long enough. Limited payment policies are policies where you agree to pay a reasonably high annual premium for, say 20 or 30 years, then you don't have any more and you're covered for life. Single premium life insurance policies are investments where you pay a minimum amount up front, like around $5,000, and get minimal life insurance coverage while you keep the money there for a period of time like 5 to 8 years, earning interest on it, getting it all back plus interest at the end and covered by life insurance on top of it. It's tax-free. You can borrow on the money in there at low rates. There are substantial penalties if you take the money out early. Some investment companies sell them. I say keep life insurance and your investments separate, meaning buy only term insurance if you buy any type of life insurance at all. If you choose to buy LI, you have to examine the particular policies and decide what's right for you. You can borrow money on these policies, especially if you have had them for a while. The best type of life insurance is said to be annual, renewable term insurance at 5 to 8 times your annual salary. The other policies are too complicated and you usually end up losing through some hidden expenses. Insurance companies will generally check you out and either charge higher for certain conditions such as smoking, heart condition, etc. Or they might attach a clause to the policy giving you limited benefits in case of a certain manner of death. For instance, if you're obese, they might only accept you if you agree to take a 50% loss of coverage in the event of death due to heart attack. They may give you a modified rating either for medical or moral reasons which you can dispute, but usually they will try to keep that information from you and just reject you outright. You have the right to know why you were rejected. If you have an existing policy and want more coverage, your best bet is probably to keep your original policy since you have some equity built up in it and simply buy a new one for the additional coverage. Don't cancel the one to buy another one since startup fees will probably be more expensive than for your older policies. Don't take what your agent says at face value. Ask questions, get information, then decide what's right for you. What company or companies does the agent represent? Does the agent have any professional designations? Professional designations include Chartered Life Underwriter, CLU, and Life Underwriting Training Council Fellow, LUCF. Agents who also are financial planners may have designations such as Chartered Financial Consultant, CHFC, Certified Financial Planner, CFP, or member of the Registry of Financial Planning Practitioners. Is he or she a member of a professional association? The major association for agents is the National Association of Life Underwriters, NALU. Through NALU's local associations, agents can attend educational seminars and can stay on top of trends in the business. Similar training and services are provided to financial planners through the American Society of CLU and CHFC, the Institute of Certified Financial Planners, ICFP, and the International Association for Financial Planning, IAFP. If you miss a premium payment, you typically have a 30 or 31-day grace period during which you can pay the premium with no interest charged. After that, the company can, with your authorization, draw from a permanent policy's cash value to keep that policy in force. In some flexible premium policies, premiums may be reduced or skipped as long as sufficient cash values remain in the policy. However, this will result in lower cash values. If you become disabled and can't pay the premiums on your policy, provisions or riders that provide additional benefits can be added to the policy. One such rider is a waiver of premium for disability. With this rider, if you become totally disabled for a specified period of time, you do not have to pay premiums for the duration of the disability. Another rider, called an accidental death benefit, provides for an additional benefit in case of death as a result of an accident. A relatively new rider offered by some companies provides accelerated benefits, also known as living benefits. This rider allows you, under certain circumstances, to receive the proceeds of your life insurance policy before you die. Such circumstances include terminal or catastrophic illness, the need for long-term care or confinement to a nursing home. Most state insurance departments require companies to provide consumers with a buyer's guide to help them understand life insurance terms, benefits, and costs. Ask your agent for a copy. After you have purchased an insurance policy, keep in mind that you may have a free look period, usually 10 days after you receive the policy, during which you can change your mind. During that period, read your policy carefully. If you decide not to keep the policy, the company will cancel the policy and give you an appropriate refund. Many companies sell annual renewable term, ART, insurance at low rates to new customers for several years to get you as a customer. Consider buying with one company for 4 or 5 years, then switching to another company to get discount rates for new customers. Buy life insurance directly from the company without using an agent. Never rely on a policy. It could render it void. If you're a young couple, you could probably save money by not even buying life insurance. If your employer has a group life insurance plan, consider getting it. Some people say that mail order and TV advertised policies generally charge more than others and offer very low benefits because they take anybody. Life insurance policies are backed by state guarantee associations, but the exact coverage varies drastically from state to state. Some products, like variable annuities, can be recovered in full because of the way they're structured, but if you have term life insurance or a universal policy, you should know the limitations of your state's coverage. The term life insurance policy. Term policies are made for a specific period of time, and if you die within that time period, it pays off to your dependents. You can renew it once the term ends, but the policy generally costs more as you get older. There is only a death benefit involved. The advantages are that initially, premiums are generally lower than those for permanent insurance, allowing you to buy higher levels of coverage at a younger age when the need for protection often is greatest. It's good for covering specific needs that will disappear in time, such as mortgages or car loans. The disadvantage is that premiums increase as you grow older. Coverage may terminate at the end of the term or may become too expensive to continue. Permanent insurance provides lifelong protection and is known by a variety of names, including whole, ordinary, universal, adjustable and variable life. As long as you pay the necessary premiums, the death benefit will always be there. These policies are designed and priced for you to keep over a long period of time. If you don't intend to keep the policy for the long term, it could be the wrong type of insurance for you. Most permanent policies have a feature known as cash value or cash surrender value. This feature, which is not found in most term insurance policies, provides you with some options. You can cancel or surrender the policy in total or in part and receive the cash value as a lump sum of money. If you surrender your policy in the early years, there may be little or no cash value. If you need to stop paying premiums, you can use the cash value to continue your current insurance protection for a specific period of time or to provide a lesser amount of protection to cover you for as long as you live. Usually, you can borrow from the insurance company using the cash value in your life insurance as collateral. Unlike loans from most financial institutions, the loan is not dependent on credit checks or other restrictions. You ultimately must repay any loan with interest or your beneficiaries will receive a reduced death benefit. The cash values of many life insurance policies may be affected by your company's future experience, including mortality rates, expenses, and investment earnings. Keep in mind that with all types of permanent policies, the cash value of a policy is different from the policy face amount. Cash value is the amount available when you surrender a policy before its maturity or your death. The face amount is the money that will be paid at death or at policy maturity. Cash value insurance/whole life insurance. Cash value insurance/whole life insurance generally costs a lot more than term life insurance and includes a tax-deferred savings account facet to your policy which you are contributing to and which pays off at some future date. This is the most common type of permanent insurance. The premiums for a whole life policy must be paid periodically in the amount indicated in the policy. These premium amounts generally remain constant over the life of the policy. You can borrow against this value, and should you cancel your policy at any time, you get a lump sum back. These policies can be complex, but the advantage is that the policy itself generally doesn't increase in price as you age, contrary to the term policy which does. You earn interest on the money in these policies and, of course, the selling point is that you're covered by death benefits while saving money. However, the insurance company comes out on top because while your money is really compounding and could get more elsewhere, they're most likely only offering you marginal gains and taking money out for commission fees, etc. And the fact that you can borrow against it is absurd since it's your money anyway. Variations on this type of insurance are universal life and variable life policies, where the investment and the insurance parts of the policy are kept separate and the policy holder can actually choose how to invest the money in a variable life policy, in essence getting a term policy with an investment package, but critics say it's too expensive with upfront fees such as a commission or startup fee and hidden costs, so you're better off just getting a term policy and investing your money on your own universal life or adjustable life permanent insurance. Universal life or adjustable life permanent insurance allows you, after your initial payment, to pay premiums at any time, in virtually any amount, subject to certain minimums and maximums. You also can reduce or increase the amount of the death benefit more easily than under a traditional whole life policy. To increase your death benefit, you usually will be required to furnish the insurance company with satisfactory evidence of your continued good health. Variable life permanent insurance. Variable life permanent insurance provides death benefits and cash values that vary with the performance of an underlying portfolio of investments. You can choose to allocate your premiums among a variety of investments which offer varying degrees of risk and reward: stocks, bonds, combinations of both OR accounts that provide for guarantees of interest and principal. You will receive a prospectus in conjunction with the sale of a variable product. The cash value of a variable life policy is not guaranteed and the policyholder bears that risk. However, by choosing among the available fund options, the policyholder can create an asset allocation that meets his or her objectives and risk tolerance. Good investment performance will lead to higher cash values and death benefits. On the other hand, poor investment performance will lead to reduced cash values and death benefits. Some policies guarantee that death benefits cannot fall below a minimum level. There are both universal life and whole life versions of variable life. Chapter 2. A Life Insurance Guide 2. Guaranteed Insurability Rider. Many people are afraid that the estate taxes due upon their deaths will force their heirs, children, to have to sell their house, business, or farm to pay off the tax bills, so the insurance companies try to get people to buy enough life insurance to cover the estate tax, but there's an easier way. When you buy a standard term life insurance policy, buy a guaranteed insurability rider which would guarantee to the one surviving spouse that in the event of the other's death, he or she can purchase up to 10 times the amount of his or her own current life insurance without regard to health or medical history. For example, if you and your spouse each had $100,000 in lien and he dies, you could then buy up to 10 times your policy value of $100,000 at the current price, and then when you die, this money would be used by your heirs to pay off the estate taxes rather than buy expensive lien policies every year for 10 to 20 years while you wait to die. This way, the policy that is needed to pay off the estate taxes is deferred until your death. Your spouse will probably have to buy this policy within 90 days of your death. If you can get his lien claim processed quickly, you might even be able to use that money to buy the rider. Ask your insurance company about GIRs. Second to die / estate taxes insurance. Second to die insurance is a life insurance policy that's made out to pay benefits only after the second of the two people named in it dies. One way to use this is if you expect to leave a considerable estate to your kids, like a house or a business, but little cash. You buy a second to die policy so the kids will have cash to be able to pay the estate taxes on it. Ask your local insurance carrier. Life insurance. Search for lost policy. If someone you know dies and had an insurance policy which you can't find, don't expect the insurance companies to cough up that information for you. You have to go look for it yourself. Check your friends / relatives' bank records and look for payments made to an insurance company. If you don't know if they had a lien policy, or if they did, you don't know the company, these companies will do a search for a fee. American Council of Life Insurance. Information Services. 1850 St. N.W. Washington, D.C. 20006. 800-423-8000. 800-338-4471. 800-942-4242. ACLI.com. Will search its database of member companies. Lifesearch.net. 800-770-2485. Medical Information Bureau. POB 105, Essex STA. Boston, Massachusetts 02112. 617-426-3660. MIB.com. This is a central watchdog agency which keeps medical records on people to give to insurance companies, which then determine if they are trying to perpetuate a fraudulent claim / policy. Contact them to get a copy of your medical report for about $8. You can get your medical record or your insurance records from them. Life insurance on children. GerberLife.com. Life insurance for veterans. For information about government life insurance, veterans may call the VA Insurance Center toll-free, 800-669-8477. Specialists are available between the hours of 8 a.m. and 6:30 p.m. ET, to discuss premium payments, insurance dividends, changes of address, policy loans, naming beneficiaries, and reporting the death of the insured or a beneficiary. After hours, a caller may leave a recorded message, which will be answered on the next workday. If the policy number is unknown, send the veteran's VA file number, Social Security number, military serial number or military service branch and dates of service with date of birth to one of 2 VA insurance centers. For states east of the Mississippi River or for any policy which is being paid by a deduction from VA benefits, military retired pay or a checking account, send to Department of Veterans Affairs, Regional Office and Insurance Center, POB 8079, Philadelphia, Pennsylvania 19101. VA.gov. For states west of the Mississippi River and the states of Minnesota, Wisconsin, Illinois, Indiana, and Mississippi, send to Department of Veterans Affairs, Regional Office and Insurance Center, Bishop Henry Whipple Building, Fort Snelling, St. Paul, Minnesota 55111. VA.gov. Servicemen's Group Life Insurance /SGLI may be converted to renewable 5-year term coverage known as VGLI, Veterans Group Life Insurance. This program is administered by OSGLI, Office of Servicemen's Group Life Insurance, 213 Washington St. Newark, New Jersey 07102 and is supervised by the Department of Veterans Affairs. Coverage may be obtained in increments of $10,000 up to a maximum of $200,000 but not more than the amount of SGLI that the member had in force at the time of separation from military service. Veterans Administration, 810 Vermont Avenue, NW, Washington, D.C. 20420, 800-827-1000. VA.gov. The VA helps vets with medical needs, training, and finding a job, buying a home, supplemental income, and burial benefits. en.wikipedia.org/wiki/service members _group_life_insurance. Life insurance websites. Publications.usa.gov, What you should know about buying life insurance online booklet. EvaluateLifeInsurance.org. 2insurefless.com. aig-direct.com. aigtermlife.com. americanlifedirect.com. emeritusdirect.com. ampminsure.org. certainquote.com.